Gordo, you said to come back on Friday. What's going on this Friday? Well, let me tell you. Today, top Fed officials warn central bank must not be complacent on inflation. Well, I can actually show you a chart right now. Here's your US government 10-year yield. This is like your inflation indicator. As you can see, we have a pattern here, head and shoulders pattern, inverted, which means it wants to go up. And we have our price target right here. And you guys would not believe it. It's actually going up, which means inflation go higher. This is confirmed. You had the head and shoulders pattern, you had a breakout, you had it come down, it retested the support line that the head and shoulders had to break at first, and it found support today on it, and now we're going up. All you have to do now is just go above this yellow line here, which is your 200-day average, and you'll have support to the upside, which means more inflation. Let's keep going. Before I throw another news article in your face, here's your 2-year yield. This is what the Fed is following, for those of you that don't know. And as you can see, it got rejected. It's going down. It just needs to go to the same level as that shoulder there, the most recent one right over here. And then that will be your cancellation of the head and shoulders pattern, in a sense. But you still have this giant descending triangle that it's in, and it's probably just going to keep bouncing all the way to the tip. And it's going to break out either down or up. If it goes up before January, that means you get a rate hike in January because the Fed is already a little too close to it. Now back to articles. Gold rockets to fresh record highs after Fed's final 2025 rate cut. Let's go look at the chart. Here's your gold, and I am going to turn on an indicator for you. You have the 200-day moving average. Turn that one off. Okay, so gold is above the 200-day moving average. You guys broke up out of a descending wedge triangle. It's the same thing. And you guys still have a price target to go to that I've set here. I believe this is drawn on the first video I ever posted on YouTube. If you feel like going back that far, if you don't feel like it, I don't blame you. And more news. Take 5. One last push. This is your global leaders meeting for one last push to secure deal with fund that country that's in a war with frozen Russian cash, while United States releases overdue labor market and retail sales data. Meanwhile, central banks in Euro area, Japan, Britain, Norway, and Sweden hold their last get-together of the year. Now, if you guys are wondering, well, if we have more inflation here in the US, what's going on in Europe or other countries? I can show you that too. So first up, here's your Japan. You guys are having inflation in Japan. Your 10-year yield is going up, which means globally inflation is going to go up because people used to borrow from Japan at almost 0% interest and buy their government bonds for a very high yield rate, whatever it was at. I think it was at 4%. But anyways, that's not financial advice because you can't listen to me because I am a fictional character. But you also have Germany. Here goes your Germany. You guys have a inverted head and shoulders pattern like we do have on our 2-year yield and our 10-year. Wow, it's all over the place, isn't it? This one, actually, I'm going to say it played out. It should cool off now. But Germany, you guys are having some inflation over there. We're going to keep going with this. This is your UK 10-year yield. You have it's called a triangle pattern, and you also have a head and shoulders pattern pointing down. Now, is the triangle pattern bearish or bullish? No. It's just whichever way it breaks, it breaks. And it's cool. Head and shoulders pattern, you have like 7% chance. Google it. Don't hold me to my word for it. That it's going to go in the direction of the head and shoulders. It still needs to break this bottom line, though. If you break this top line, you're going to go up, which means more inflation for the UK. And finally, you have the Euro 10-year government yield. This one, you guys in Europe are basically feeling a lot of inflation. This one played out just like Germany's. Germany's We're going to have some cool off now. So this one too, also going to have some cool off now. This is kind of boring. Let me know in the comments if you think it is. And let's jump back into the articles. There's the Fed is buying billions in T-bills. Just don't call it QE. So those of you that don't know, the Fed can't buy directly from the Treasury. Lesson time, by the way. So we went over what money is created, destroyed, whatever. It's just pixie dust, debt. And then we went over what is liquidity in the global markets with banks lending to each other, causing liquidity, money flying everywhere. And then now you have the Fed is buying billions in T-bills. Now, how does the Fed get these T-bills? Because if you remember from Wednesday's video, only the banks can run to the Fed to get money if the banks don't trust each other. Now, where does the Fed get its T-bills? Well, what you have is the US Treasury, who creates all the bonds for banks to buy. Now, the banks buy the bonds in the form of T-bills. Then, what you have now is the banks have the T-bills, and then the Fed, since it can't buy directly from the Treasury, since it's not a government branch, it is just a corporation, and you have the Fed buy the T-bills from the big banks to expand their reserves. And there you go. As oil post weekly loss on oversupply concerns. We showed the chart on Wednesday, and I'm going to pull it up again. So here's your oil. I said on Wednesday, you either break up out or you break down and go lower. So here we have a break. So we go ahead and move this price target down. And what this means, including the support of the 200-day moving average, giving it support to the downside, you guys are going to see oil get cheaper. Does that mean cheaper gas prices for you? Maybe. It depends if the corporations want to give it out for less or not. This video might be shelved because of that. I'm not too good at this. Anyways, let's keep going. And finally, you have morning bid. Is Santa Claus coming to town? For those of you that don't know or do know, just recap, you usually have a Christmas rally where the market does its bull runs during Christmas, and it's beautiful and everybody's having a great time. Well, let me show you something in the chart. Here is your SPY S&P 500 index. I just really like looking at this one because it's very volatile. And you have two blue lines up here, this top one and this lower one. This created a little range for price action to jump inside of. I said if you break the top one and you stay above it, your next target would be this yellow line over here that goes back since forever ago to get above that in order to have a bull market and hit that price of whatever that investor said that I can't remember his name on Wednesday's video. But as you can see, we peaked out above it. Cool. And then we came back down. Cool. What does this mean? No confirmation of either direction, but it's looking like you guys are cooling off just due to this one indicator here. It twists in the direction that price action is going to go. And as you can see, we're twisting and it looks like we're going to go lower. But no confirmation yet because it has to cross like over here in order to get confirmation to do that. And one more special thing for you guys to see is your Bitcoin. Now, I said in the last video, here's your trend line. Don't break it. Well, you broke it, which means now you're going to have to go down. This is a flag pattern. So how you would actually measure this is you can either go from inside the wedge here and just play the wedge if you want to play safe. Or for those of you that like big money bags, you go over here to the top, drag it all the way down to, I'm going to say about here because that's where price action completely formed. And then move it over. And then you guys have a set Bitcoin price of 71,000 62 and 32 cents. But you still have some stuff to break, like you still need confirmation here. There's no confirmation on your indicator here. You didn't retest to make sure that you're going to go down for confirmation, and you still haven't broken that blue line. But general picture, just because it broke that rising trend line, Bitcoin's looking bearish, and we will only see with time. Now, all of that crazy stuff, the thing that I want you to get out of this video was just the lesson, which was how the Fed buys the T-bills to give to banks during times of liquidity problems. And also, my favorite part, you guys won't be able to afford much stuff because, as I just showed, our 10-year yield is going up, which means more inflation, which means you're going to have to spend a lot more uncomfortably. So you can go pick up more jobs, but oh, wait, there was less jobs in, what was that report? Monday's video, I think. Look at it. Just go through some of the videos. Just look at them. They basically repeat. But it was negative 31,000 jobs during that report. So can't get a job. Looks like inflation's going up, and the only way to try to get some extra cash flow in there is to start a business. But Gordo, I don't know what to do. I got a pressure washer? Go pressure wash your neighbor's trash cans. Get some done. Just show up in there and just pressure wash it. And next week, we're going to talk about trading. There's different forms of trading, and I hope to teach you all about it next week. So I will see you guys next week, Monday.